Okay, this is Brian Stoll for Timing Strategies, Tuesday, August the 9th. Happy birthday! If you can't hear it on the CNBC channel, the 5-year anniversary for the NASDAQ and the stock market bottom from October 9th, 2002 until October 10th, 2007, or 9th today. Enough of the hoopla. Again, the markets and the sentiment is about as giddy and gleeful as I can recall. So sentiment is extremely overstretched, but we're going into the end of the year, and our analog, if you look at our homepage for the S&P fourth quarter analog, what we're looking at, it's following it pretty much about a 90% correlation so far. We've got this gap that we've been looking to get filled, or I've been looking to get filled, which just isn't happening. So if we stay above that gap from Friday's low to Thursday's high for another day or two without closing it, and we continue to make marginally higher closes, I will be covering the short position that I have for our RIDEX end of day platform and some other ETF, negative correlated ETF funds that we have. Currently we're still 50% short. Looking at this market, what's the best and the worst that we can hope for? Well, it depends on what side of the coin you're on right now. Certainly being short, I'm looking for a move back into the range of today, somewhere in this area. We do have a potential 5-day stab of today, yesterday, Monday's, and Thursday's lows, but that could be wishful thinking. Still looking to get long if we do get that, somewhere back down at that 152 level, about the 20-day moving average. But for now, looking for tomorrow a range, a trade back into today's range. So we had an inside bar yesterday from Friday's bar. I'm anticipating another inside bar, looking for an inside bar tomorrow for Wednesday the 10th. We could get a little bit higher high, a stab high, but in that situation, we're still, again, pretty much contained within the range. I'm going to jump down to a 45-minute time frame and just kind of take a look at, I'm sure, what everybody else can see on their own charts. But, you know, we're holding the integrity of that 55-bar average. So, again, a jump back down, at least to close that gap, would put us right about at that 55-bar average at about 154.40 on the spiders. The interesting point I do want to bring up is that, again, for all you Fibonacci idiot wave fans out there, and believe me, I've been one, still am, and old habits are hard to break, but I put very little credence in it anymore. We do have a very significant time convergence or confluence as far from the March 14th low. We have 144 bar coming in yesterday today. You can skip a day, one day either side, left or right. We also do have an 89 bar from the peak high back in May, just before we got the sell-off starting in July. Does that mean anything? Probably not. It just gives us a little bit of an evidence that, you know, we do have a little more resistance to the upside that could bring us back down at least into that range of today. But again, tomorrow remains to be seen. If this market does not close this gap that we're looking at right in here within the next 2 days or by this week, if we don't close that gap by Thursday, Friday this week, and we continue to close on a higher basis, I will close the short position for the RIDEX end of day funds and the ETFs with the negative correlation on them, and I will reverse to a long position, but we'll be monitoring that intraday and at the end of the day to reverse at any time necessary. But so far, following last year's script at this time almost to a T, so we don't want to get run over like anybody that might have gotten run over last year. So again, this is Brian Stoll for timingstrategies.com. Please give us any of your comments, responses, or questions through our email, and I wish you all the best. Enjoy your day.